focus is going to be at 638 resistance level. If we get any sort of, let's say, any sort of headlines from let's say China, Russia, or any other major trade deal or negotiations that are currently making headlines, then this will send us back to collect liquidity around here at 618, filling that gap at 621, retesting 618, defending 618, and then moving back up. But if we come down to 618 and I see that we are weak, then I would be very excited for us to go back down, retest the prior historic all-time highs before we come back up to 638 and advance higher. Now, this weekend, I did remake my chart, and I think this will be something of the team's interest as well. So for this one, we can see we are right at the top of the trend line here, and that indicates that we're going to get some sort of pullback before we advance higher. But if you look at this particular chart here, this gives us a little bit more room. It gives us room to at least 685 to around 700 within the next 6 months here, 4 to 6 months, I would say. So heading into Q1 2026, it is possible that the S&P 500 can extend all the way to 700s. And the way that we will find out is really this upcoming week. How can we see them collapse volatility where they're going to crush the puts and not go down? If bulls can do that and really achieve the candles getting smaller and smaller, then we'll see, guys. But for now, let's just focus on 638 resistance. Above 638, we can be bullish. Below 638, we have to be very careful. And I would say all the way to 625 is really no man's land. And anywhere below 625, that is bearish territory towards the prior historic all-time highs retest. Now, I do have a watch list, you guys, although I'm not going to be particularly focusing on SPY and trading SPY during these times when I'm uncertain. I'm not going to focus on what the overall market is going to do because I already know that it needs to pull back or create some sort of digestion. Now, what my focus is going to be in the meantime, we already know that the market is bullish. Long term, it's going to be bullish. We know that rotation is flowing into a lot of the retail stocks, a lot of the consumer discretionaries. And we have been trading these stocks. We traded Walmart. We traded some other discretionary stocks that have been doing really well. And I think for the upcoming weeks, we will see rotation flowing out of XLI. So these type of sectors will probably see outflow and a pullback correction. So the stocks that are going to be in XLI are, let's see, we have GE, RTX, Caterpillar, Uber, GE, GEV, BA, ETN, HON, UNP, DE. These stocks are very overbought and can see a pullback heading into the upcoming weeks. It's funny I say that because I do see a list of stock, WM, which I am very bullish on heading into the upcoming week, that is also in that particular sector. Now, what this means is, like I said, I used an interesting term when I started this session. I said this week may be the laggards week. What I meant by that is this week, we're going to see stocks that have been lagging behind on the overall market. So what are these stocks? Apple, as we can see, Apple's just doing absolutely amazing. I see Faith drew some lines here. Let me just remove the annotations. How do we remove the annotations? There we go. So if we take a look at Apple here, Apple looks very, very bullish. We have a bullish engulfing here. And for those of you that are wondering what's going to come from Apple here, here's what you can expect. If we don't exactly shoot up, and break 230, you can use 230.90 as confirmation. If bulls don't get above 230.90, then you can anticipate them to cool off in a very similar fashion where we saw them cooling off for 2 weeks on that massive demand candle and then moving higher. Now, given where we are at, 230.90 is going to be a very, very it is possible they can just shoot up towards 238. It is very, very possible to see them do that. But I just want to share that Apple is going to get dip bot from here. So those of you that are watching Apple that want to buy Apple on a dip, or that are trying to get the green light whether Apple dip buy is good, I'm giving you the green light. I think the dip buy is good, and it's going to push it towards 238, which is that gap filled there on the weekly chart. So the gap is very, very clear. It's on the weekly chart, and that's where the bulls are going to target for Apple. Now, team, are you ready for the next one? This one is badass. So, over the weekend, I was looking into why exactly Rain Bond alerted a Tesla. I was trying to see why. Um, if you guys noticed, Rain Bond sent out an alert in the swing trade alerts buying Tesla January 16, 600 call on August 8th. So that was on Friday. And I went to the daily chart, and you guys take a look at this beautiful setup. We are finally above the 20 EMA line. We're finally above the 200 SMA line. And we are finally above the downtrend line that dates back all the way to 488, which is the historic all-time highs. That is pretty great. That is a pretty great setup. So I can see why Rain Bond picked this up, and the setup looks really, really great. Pay attention to Tesla. If any catalyst that is bullish comes out of Tesla, just know this stock is going to go absolute rocket mode. There's been a lot of smart money inflow. We are above the 20 EMA line, which means the algos are going to turn bullish. We're above the 200 SMA line, which means that the overall trend still remains bullish. Now, once the 20 EMA gets above the 200 SMA line, that's going to just trigger that major upside. As we can see, whenever the 20 EMA line takes lead, this is where the short-term trend gains momentum, and we really start to see that expansion. Now, for Tesla, now that we have broken that downtrend, my target is going to be this resistance level up ahead. 366 is our next resistance level. Once we do touch that level, this will be the third test at that level of resistance, and any sort of digestion or pullback that you see is going to be a buy the dip opportunity for the next rocket towards this gap fill here at 403. So Tesla looks really, really good. Price action wise, we are getting a downtrend from this we're getting a breakout from this downtrend that has been in motion ever since 488 historic all-time highs. And this is the second, third, fourth, fifth. This is the eighth test, you guys. This means that there's theoretically no supply right there. So yeah, very, very bullish setup. It looks great. We're seeing smart money inflow, and we're also seeing some catalysts come in from internal from the company. We saw Tesla giving Elon Musk another $30 billion worth of Tesla stock shares at $23 average cost. I mean, oh my gosh, you guys, the stock is at 329 and they gave him $23 per share average. That's just absolutely insane. But yeah, Tesla looks really great, and Rain Bond alerted the Tesla January 16, 2026 600 call. Now you can trade it the way that you like to trade this stock, but I hope that bringing it to your awareness is going to benefit you in a positive way. All right, so now that we covered Tesla, let's cover UNH here. Now I looked at a lot of sectors, team, and something that I really don't understand is this right here. I'm seeing that XLV is giving the notion that it's going to have a job-based job breakdown. I don't understand. I'm very, very confused because I haven't really seen such division when it comes to the subsectors within XLV. So the industries within XLV are very, very divided. Stocks like UNH are just absolutely crashing lower, while you got stocks like ABBV that are absolutely killing it and just looking amazing and looking like they're going to cover more upside in the upcoming weeks. If we take a look at the daily time frame here to look at the earnings report, they did really well and they had a positive earnings reaction. We're currently at resistance, so it does make sense to get that supply rejection there. But my concern is, are they going to finally sell off here? It just doesn't make sense to sell off given that we have been beating earnings. Thank you, Christopher. That's another one on my list. So, Guild, if we take a look at Guild here, just absolutely badass. It's beating earnings. And take a look at it yourself, you guys. Volume is there. We are just looking like we're going to have a major expansion. I mean, this right here is known as a rounding bottom, and rounding bottoms are very bullish. So let's type in rounding bottom pattern. So this is what rounding bottom patterns look like. And as we can see, it's very bullish, very bullish setup. And I just don't understand, why is XLV looking like it's going to break down? Is it a fake out? The daily time frame itself doesn't look too bad. We have a bullish divergence, as we can see, and what that tells us is that the relative strength index is increasing while the stock is going down, and it could be for all kinds of reasons. Maybe traders are maybe they're selling calls, or sorry, whatever it may be, really, like they may be just they may not have covered their short positions. Whatever it may be, something is off about the particular sector. Whereas the actual stocks are doing really well. If we take a look at J&J is another stock that is just, I mean, take a look at that. Does that look like a stock that's coming from this particular sector? It does not. So I'm confused, you guys. I am a little bit conflicted, and it's not just this particular. It's not just J&J. It's not just ABBV. If we take a look at CVS here, look at this chart, you guys. I mean, take a look at this chart. Look how beautiful this chart looks. This is a bullish pennant chart pattern. If we take a look at the bigger time frame here, I mean, everything about this chart looks very great. And the beauty is the stock also just had positive earnings reaction. The earnings was bought, bulls are coming up, and they're just absorbing the selling. So the particular sector itself, XLV, looks a little bit iffy, but the stocks look very bullish. And looking at UNH, which let's take a look at XLV, see what the biggest weights on this particular sector are. We got LLY, J&J, ABBV, ABT, UNH. Wow, UNH used to be second place. That's quite. But here's UNH, you guys. Now let's cover UNH. What does UNH look like on the daily time frame? We'll look at the other time frames as well. We have a bullish divergence here with the RSI, which is the relative strength index, rising while the stock price is declining. And the stock has gone down from 610 all the way down to 230 in a matter of just 4 months. Very oversold, and we are finally starting to get these very small candles. We've already got what is known as the capitulation. So the capitulation is in, and I think this reversal may be it. Now, how are you going to trade UNH? You can either pick up long-term shares and just not look at it for the next year while the company learns from its mistake and turn out the same way that Netflix turned out. Like I said, team, like I said in the chat room, this behavior, obviously, it's not common, but it does happen. If we take a look at Meta, there was a time that Meta went through the whole what was it? The whole advertising crisis after Apple. I can't remember the details what exactly Apple did. They made some changes in their privacy that greatly hit Meta's advertising approach, and the stock went from 383 all the way down to 85.90. The stock went down so much that Jim Cramer, when it was at 95, Jim Cramer actually got on live and he was apologizing with tears to investors for getting them into Meta. And then you can see Meta had a big rebound all the way to 784. And that happened within a span of 3 years. Another stock is Netflix. By the way, Netflix is also on my weekly watch list. We got a beautiful candle after putting an end to that 7 week downtrend. And there's a great chance that we're going to see more upside towards 1237 heading into this upcoming week. Now, if we take a look at Netflix on the long term, we can see that stock at some point went from $699 all the way down to $163. And from there, within a matter of 3 years, it's gone from 160 all the way to 1,341. So this is why I said when you do buy UNH, do not look at it within a year. Just let it be. Just let it be dollar cost average on it without having to be in very large positions where it's going to largely affect your performance. Do pick up shares, but never pick up anything with super confidence that it's going to turn out the same way that we expect our other we expected Netflix and Meta to do. So that's UNH, you guys. Looks very bullish. For those of you that are wondering what is a bullish divergence, let's take a look at an example of a bullish divergence. I did post it on our fire charts only. Give me one moment, team. So this is what a bullish divergence looks like. Like I said, it is when the stock is going down while the RSI is making higher lows and pretty much higher lows. That's all that matters. The higher highs do not matter. As long as we got the higher lows, as we can see there, this marks a divergence, and it's a bullish divergence, and it is a very positive signal that the trend is starting to change internally, and eventually it's going to show beneath the surface. That's what's happening, and it's going to show within the surface very, very soon as well. So that's what we have on UNH. Very, very bullish setup. If you guys do want to pick up a contract, I would honestly recommend either October, or you can even go further out into December or January to be really safe and give it as much time. Like I said, our focus is on the recovery through time. So, taking that into consideration, I would want to pick up something that really gives me the value of time to let the stock do its thing. So I would pick up a January 16, 2026 330 call at 6.20. So again, that is UNH January 16, 330 call at 6.20. Very, very nice. And you can see, although we had a very small move on Friday session, that tiny candle there, the contract went up 17%. That's really, really good. So imagine if we do get a nice recovery back up to 325 area. I think that contract is going to be worth a great amount. And we have 160 days until the expiration due date. So definitely keep your eyes out on that strike. I think it's great. For those of you that want something cheaper, you can go with the 340 call or the 350 call, currently trading at 4.30. If you do want an option that is cheaper, team, for those of you that are growing your accounts using swing trading to grow your accounts, I think it's an amazing strategy. And if you do that, make sure you give yourself time. Time is very, very valuable. And by giving yourself time, yes, I mean sacrifice the strike price if you have to. It doesn't do us any benefit. Don't get me wrong. I would like to choose something that is going to give us a close strike with a very, very further out expiration. That's going to make our contract very durable. But when it comes to stocks like that, it's more important that you choose time over the expiration, over the strike price. Now, for those of you that are in here, don't be discouraged that this stock option costs a lot. We are going to cover some stocks that are going to be very cheap for you to pick up. But for those of you that are shareholders that like to buy shares for long term, you can pick up UNH shares, given that the company is going to make some changes, not make the same mistakes that they did, and that things will get better from here. So yeah, that's UNH here. You guys can pick up shares, or you can pick up that option that I recommended for January 16, 2026, either the 330 call at 6.20, which is really great if you have a large account, or you can do something that is going to be slower but can really gain momentum when when it does go in your direction. So that would be the 340 call or the 350 call. Now, I do want to show you something, what I mean by when the stock does move in your direction. If you guys remember, we were alerting NVIDIA. You guys all remember, right? We were alerting NVIDIA down here. And I was telling you guys, if you just hold this contract long term, they're going to pay you over time. Like when NVIDIA was going down, a lot of people thought that this would be the end of NVIDIA, but here we are now. NVIDIA is trading at $183, far above its historic all-time highs of 150. If you look at the contract that we were buying, I think we had an NVIDIA contract for one was for October, one was for September. We had January as well. Those contracts now are, I mean, the 118 call. The 118 call for September is now trading. I can't even see it. It's up so much. I'll have to expand my strikes. That 118 call is now trading at 6,500. We bought it at $400 or $500, you guys, and now it's trading at $6,500. And do you know how I bought it? I bought it in the same approach. I just gave myself plenty of time because that time is an investment for me for the future, so that if a stock does perform better than I expected to, I basically get to enjoy this privilege here of keeping it longer while still having so much time. So, absolutely amazing. And this is why we take this approach with time on UNH. All right, now we're going to cover some other stocks that are less expensive. I do want to mention this particular stock as well for those of you that are shareholders and that like to trade stocks. Let's say you like to trade a stock for 2 to 3 months and then move on to another stock. Basically, trading stocks at good value and then selling them when they're higher. This is a stock that you can do that on. BDX. It just beat earnings, and you can see it was consolidating for over 8 years, not doing anything, and it finally went down, collected the liquidity at that smart money zone, further established support, and it just had positive earnings reaction, which means we're going to fill that gap at 207 and maybe go even higher. So if you guys want to buy shares on this stock in the 190s range to sell it in the 200, 210, or 215, 230, this looks like a good buy to get in and ride the momentum wave at least towards the 20 EMA line around 215. That's BDX. Now, if you want to trade a stock option on it, you can buy BDX June 20. Let's go to the option here. So you can pick up the BDX June 20, 230 calls. So this call right here, it only has 45 open interest, but trust me, this is all you need. So if you do need to pick up a contract, you can pick this up instead, and I think it's a great trade. You can pick it up around, you'll probably get it around 640 if you buy it on Monday. We don't expect everybody on our team to get it, but for those of you, for the few of you or couple of you that do get it, yeah, that's a trade. Now, PEP, we already have this contract team. We're already holding PEP in the swing trade alerts. We picked up our contract at 320. We're currently holding, let's see, sorry, give me one moment. Let me go to the analysis. So we have March 2026, 160 call at 3.25. And the stock is the reason why we're going to continue to hold this contract, even though we're up 20%, is because it just rebounded off of that major support. It has broken its downtrend, as we can see. And it has this nice rally, base rally with this massive bullish engulfing candle that is triggering the breakout. So really, really nice setup to put an end to this downtrend structure. Looks like a rally, base rally set up towards 154, where we plan to close our contracts as we approach it. So for those of you that do want to get in this week, you can pick up PEP March 2026 160 call at 325. All right. So for those of you that day trade, now, if you guys are aware, we moved all of our SPY trading to our SPY and QQQ high risk speculation hub. And the reason why we're doing that is so that we can protect our team from getting exposed to it. Honest to God, I'll tell you guys where my breaking point was. When I saw T-Bone, one of our members in the Discord, now I like T-Bone. I used to see T-Bone in our Facebook community, and I was very happy to see him taking my long-term swing trades. And then when I saw him join our Discord, I started seeing him getting exposed into the zero DTEs and all the stress of that, and I was not okay with it. That was something that I personally was not. It just was my breaking point, and I did not want to expose the team to those type of trades anymore. So if we are going to trade them, it's not going to be in the main chat. It's going to be in this specific channel. Now, believe it or not, you guys, the quality has gone up so much. I mean, take a look at that from FaZe. I really pay attention to everything FaZe and Bahar share, and it's really great stuff, you guys. I think it's much more organized, and the beauty is we get to focus on the chat room. We get to only talk about SPY trades, focus on, sorry, we get to focus on other stock options that are not SPY trades. And it's very, very beneficial because the market can go down, the market can be choppy, and our individual stocks can do really well. Other benefits include the options being much more durable, being a lot less concentrated with manipulation and fast AI trading. There's just so many reasons not to be trading SPY options anymore, or not to be mentioning it to our overall chat, so that our team can focus on other stock options. And here's how we're going to do it. We look at stocks like that, okay? We look at Google and we're like, you know what? Google printed this nice bullish engulfing on the weekly chart. So what are we going to do heading into this upcoming week? We're going to enter as soon as Google opens above 202.17, we're going to enter calls targeting 207.06, which is the resistance level up ahead. So that gives us about a $5 room to take advantage of this trade on the weekly, how do I say, on a week to week basis. So we're going to trade these high probability stock options in our chat room, encouraging our team to trade setups that are already showing momentum, that are not just going to depend on market conditions. And I think this will really bring great value and great profitability to our team. So Google looks really, really good for those of you that day trade stock options, that swing trade stock options, buying 3 months out and such. Look at Google, looks really, really good. And I think it's great. I think it's a great stock. All right. So, sorry, it's great for this week. Okay, team. It's great. It's a great stock for this week. It's breaking out of this digestion and it's heading towards the resistance level on this 20 EMA expansion towards 207. So we can trade the move towards that level by only focusing on Google and not other stocks within the tech sector, given that they are very, very overbought. So eyes on Google looks really good for our day traders and short-term swing traders. Now, Here's another stock to pay attention to on the weekly chart that looks really good. BBY, Best Buy. So if we take a look at the weekly chart here, we have a bullish engulfing. Now, whenever we get a bullish engulfing, even if the move does not sustain, in most cases, we tend to see a test of the resistance level up ahead. And in this case, we can see it went from 72 all the way to 75.14. And team, this is good. A move like that is good for you to secure your profit for that week and walk away, even if you don't mean to hold this trade long term. Even if you just want to take advantage of the given candles that are printed, you can trade them this way. You can swing trade this way, make 30% to 50% or 20%, whatever it may be, the next day or 2 days after without having to trade anything that's short-term expiration. So you can pick up BBY, and once we do test, let's say 71 or even 74, you can get out, walk away. You don't have to deal with any force of resistance. You guys get what I'm saying? The way I'm explaining this strategy, team. So what I'm telling you is, like, when you get a bullish engulfing like that and you don't have any resistance up ahead, you can still trade. Like, you can trade it. You can trade it towards 74. And once you get close to that resistance level, you can just walk away and say, you know what, I secure my profit. I'm not even going to deal with what's going to happen here. So that's what I mean. You can trade stocks on a week to week basis by finding it on your scanner and trading it this way. And um, we will talk more about our scanner, but for those of you that are in the mentorship program, I'm telling you, nothing has changed. I still scan in the same way by looking for percentage change and net change through the S&P 500. And now what I also do is I go to I click on these two, company profile and social sentiment, to find other stocks that are also showing up. For example, Sound showed up, and you can see Sound is finally getting a positive earnings reaction, printing a bullish engulfing on the weekly chart here. And it looks like next week is going to be a very bullish week for Sound. And we will come back to this and take a look at it. Next 2 weeks, this stock is going to advance higher. We're first going to start off with absorbing the wick there at 14.23 and shoot up towards 15.48 there. Volume is there. The setup looks really great. I think this could be a great expansion to the same way that we saw in the prior year. So Sound looks really good. Um, all right, so we covered Sound, we covered BBY. So team, do you want to learn how to do you want me to take a look at what contract we're going to trade on BBY? I'll go ahead. So this is BBY. If you want, what you can do is, like, you can pick up the 72.50 call for October. That gives you at least 3 months on the contract. And these type of expirations, you're getting in for just about a week, not more than a week. Okay, team? You're going to get in for, let's say, 1, 2, 3, 4 days or so, and then you're going to get out. So BBY, October 17, 72.50 call at 325. That's a good entry. That's a good trade to take. If you want to give yourself more time, you want to go with more time, you can go with January 16. Like I said, you can always give up your strike price for more time. So in this case, you're picking up a January 16, 2025 call, 2026 expiration, 75 call at 4.40. That's also a good contract if you want to pick that up. The 77.50 call has 1,000 open interest, and it's currently trading at 325 if you do want to pick that up. But I say pick up the 75 call just in case. If things don't if you do end up forgetting and holding through earnings, you have a backup plan. But yeah, so far this is a bullish engulfing on the daily time frame, and we expect BBY to get another green week following this bullish engulfing reversal. Now the next stock here is for our shareholders. I love trading MSI. MSI is just in time with positive earnings, is breaking out of the downtrend, which had been a digestion range from the last rally-based rally. So the last rally-based rally, as we can see, the last rally took us from 270 all the way to 507, and it digested for almost a year, and now it's getting ready for that next rally. So you can pick up MSI shares here. I think it looks really good. We're above the 20 EMA. We put an end to that downtrend that we were inside of. And now this tells us that the corrective wave has ended and the impulsive wave is beginning. Now, you can see volume is coming in. Smart money inflow is really flowing. And we had positive earnings. So buy it here and just give it time, and this stock will do its thing. Don't forget, MSI looks really good for those of you that are shareholders. This appears to be the start of the next rally, backed by strong volume, like we mentioned. And yeah, like I said, I love buying shares low and selling high. And MSI is one of those stocks that you can do that on. And yeah, you can do it with shares. All right, all right, all right. Now let's move on to the cheaper stocks. KR. This stock looks really, really good, you guys. KR, Kroger, this stock just beat earnings. And like I said, a lot of rotation has been flowing into the retail stocks. And this one looks great. As we can see, we're breaking above the resistance line of 73.48. And we have the bullish momentum indicator flashing, which is very bullish. So let's take a look at the bullish points that we can find in this chart. First of all, we had a retest of the prior support right there, collecting the liquidity, and that was followed up with a major demand candle back up. We tested resistance level the following week after. Keep in mind, this is on the weekly chart, so each candle is 1 week duration. So we pull back, we basically consolidate for about a week. Now, team, when you see something like that, where the big demand candle is defending, that means smart money is defending it. So you can see smart money defends it, and you have a clear doji candle, which means you collected liquidity off of that mini support, the bull flag, and you bounce right back. This candle right there counters that candle we had there. And now that candle this week is fully confirmed by a big demand follow through hollow candle closing far above the resistance level at 73. So that is bullish. It indicates that price is finally ready for a rally-based rally setup to advance to new highs given the stock's positive earnings sentiment and higher demand. So far, KR looks really, really good. The stock looks really great, and these stocks are very cheap, you guys. You can pick up, for example, you can pick up the October 17 75 call, which is just 75 cents far away from the money. And once it goes in the money, your contract is going to gain intrinsic value, and that's going to really, really give it a delta push, increase your delta, where you're getting paid more every time the stock uh, gains another dollar. So um, the October 17, so KR, buy to open KR, October 17, 75 call at 3.0 to 3.10. That's a good contract to hold as a swing trade for the upcoming, for at least 2 to 3 weeks. Okay, team? Give it 2 to 3 weeks on this trade. All right? So yeah, keep this one in mind. Now, team, I'm going to be really honest with you. Although I like the October 17, I would even say that I am sharing that by force. What I mean is, um, it is a good expiration, okay? Don't get me wrong. But the reason why I'm sacrificing it is because I want you guys to also have a good delta to it, so that when the stock does move up, you can secure profit, you can be happy with the way that you traded that stock, and then move on to the next one. But what I really would like to do on these type of moves is give myself time, the investment of time. So what I would do is I would pick up a January 16, 2026. Either you can pick up the 75 call. If you don't want the 75 call, you could pick up the 77.5 call at 3.8. And if you want, since the stock already has reported earnings, you can pick up the 80 call at 2.9, which is I mean, the stock itself, the strike itself is a little bit further, but I assure you, because of its time, it's going to gain value really, really nice, especially as the stock gets above 75 and closer to your strike. So you could probably do the January 16, 2026 80 call at 2.90. That's a good trade as well. But if you have the funds, if you really do have the funds, I would get the closer strike for 77.5 call at 3.8. I think it's worth it. But yeah, that's a good trade, you guys. Let's take a look at some other expirations for our longer term traders to really make it safe. Now, for those of you that want to really have the time factor on your end while choosing these beautiful stocks that are set up for growth in the future, you can pick up a June 18, 2026 expiration 80 call, the 80 call strike at 5.0. Really, really good contract, you guys. I think if you have the funds, this is better than the other contracts that we talked about. It gives you 312 days for the stock to do whatever it wants, basically. And I think that is such a great benefit to have on your trade. So yeah, looks really, really good. The other options are good as well because the stock is going in our how do I say, in our direction. But if you do want to add the value of time, it's right there for you to do so. All right, now this stock is very interesting, you guys. Take a look at WBA. Oh my gosh, this stock has been just right under our noses. And look at this, is on the weekly chart, you guys, which means each candle is 1 week. Look at the way this stock has been grinding higher and just building that momentum for a potential short squeeze. I think it's very, very interesting. We take a look at the weekly chart. This is what it looks like. We take a look at the daily time frame. This is what it looks like. Demand is increasing because each time we are seeing the stock sell off, it is forming a higher low, which means the dip is getting bought higher than where price was in the prior sell-off, and that is a bullish signal. So this is how the daily time frame looks. The stock is very, very oversold. If we take a look at the monthly time frame, this is what the monthly time frame looks like. Very, very oversold. And I think it's a very interesting setup, you guys. Just as we break out, I think buyers are going to show up very soon, and this is going to squeeze towards 14.50 area. So how are we going to trade this particular stock? If you don't want to pick up if you don't want to pick up stock shares, you can pick up WBA contract for January 16, January 15, 2027, and you can pick up the 12.50 call at 13 cents, okay? 0.13, which is $13. Okay, team? Now, if you want to make it even safer, if you want to take it even one step safer by adding $3 of value for a better deal, you can do the December 17, 2027 call at 12.50 strike at 16.5. So 0.16. That is just $16, you guys. $16 per contract. Now, the reason why we're picking up this contract is because look at the sheer difference, you guys. If this stock even squeezes $3, this goes from 16.0 to probably 0.50, 0.50 to even 1.0. So it can gain such a big value as soon as it goes in the money. The current contract that's in the money, which is the $10 strike, that one is trading at 2.0. The 12.50 call strike is trading at 16 cents. It's absolutely absurd, you guys. So I definitely would pick up a few of these contracts. Remember, you do not want to pick up anything that is going to make you uh, make you sweat, to really just frankly give it out. But yeah, this contract is really good. We have 859 days, you guys. And the contract is WBA December 17, 2027, 12.50 call strike at 0.16. So far, so good. Hopefully, you guys caught that. You guys wrote it down somehow. And now let's move on to our next discussion. So far, I think it's worth us getting into that cheap contract. Mohammed said, daily is very overbought though. Should we wait for a pullback? Now, you definitely can wait for a pullback, but given just how cheap it is, given just how cheap the contract is, I say buy one here, buy one or two, and when it does go down, just buy another one or two. I think overall, the bigger picture, it looks really good. And I think the chances we do squeeze higher is very high. I mean, earnings reports have been good. And I think it looks good. I think it looks good. It's worth having a tiny bit of exposure. I mean, take a look at it, guys. We are just getting above the 20 EMA line. We have closed about, I mean, 15 weeks now above the 20 EMA line. And look at where the next line is. It's all the way at this resistance level, which is 2682. That's where the 200 simple moving average is currently trending at. Very, very oversold. All right, let's move on to our next trade. Now, our team, we're talking about BABA, BABA stock. And I was looking at the daily chart, you guys. It definitely looks interesting. We are right at this trend line here. And if this does break the trend line going into the upcoming week, or if they do beat earnings and we get the right breakout above 123.94, I will be watching this trade for a post momentum, post earnings bullish momentum trade strategy towards the 134 resistance and the 148. So I will be watching this particular stock in the upcoming earnings report for August 14th. Very interesting. It's sitting right at this resistance line here. It hasn't really broken its downtrend, but it's trading right at the forefronts of it. All right. Did I talk about all the setups? Let's see. Oh, we got one more, you guys. We got one more setup. So MNST. I am looking into this stock for the long term by buying the dip for the future. The reason why is because it just had positive earnings. And as we can see on the weekly chart, we are breaking out of this resistance over the last 3 years. We're putting an end to that digestion zone. And what this means is we're going to achieve new historic all-time highs and advance towards the 70s. So MNST, Monster Beverage, just got its positive earnings report, and it's currently looking really great on the weekly chart to see more upside in the following weeks. Now, the contract that I'm using to trade this particular move is obviously going to be with plenty of time, and the reason why is because, like I said, we're buying it here, and although it is overbought on the daily time frame, we are buying it for the future. There are stocks that do really well. I'll give you another stock, eBay. If we take a look at eBay, eBay has these gaps everywhere where the stock just gaps, and eventually, yes, we do fill the gap, but the move always tends to, sorry about that, move in our direction. And I think this will be no different. So MNST looks very, very bullish here. On the longer term time frame, on the weekly chart, as we can see, this is a book quality setup here. We are getting fourth test breakout from this consolidation, from this rally-based rally, this bigger rally-based rally. And the last time that this happened, team, you can see, I mean, this is what happened. Once we did break that digestion the same way, the stock ended up advancing higher, riding above the 20 EMA line. And I think the same is formulating here. So like I said, MNST, which is Monster Beverage, massive engulfing candle on the weekly time frame. This momentum is fueling from positive earning sentiment. Given we're breaking this major resistance, expecting this demand candle to initiate towards our next towards the 700s. So yeah, looks very bullish, you guys. And the way that we're going to trade it is buy to open. Where is it? June 18, 2026 70 call. So the 70 call is currently trading at 4.45, and it only has 719 open interest. But again, team, this is all we need, especially given that this contract expires in 312 days. That is more than enough for even somebody trading 5 contracts at a time, 10 contracts at a time. Believe me, that's more than enough. So yeah, this is where this is where this current contract sits at, and it's really great. It's only $6 away from the 70 call strike, and yeah, it has plenty of time. So again, MNST June 18, 70 call at 4.45. All right, team. I think this might be it. This might conclude all of our trades here. Rain Bond also has some great swing trade ideas for the team, and she'll be sharing in our Discord. I can see it from Rain Bond server here. She has some really great trades here. So she's got, and I hope I'm not overstepping by showing her trades here, but she's got Starbucks lined up for you guys. She'll be watching that. She's got MRK, and she's got PG. I really like these names, by the way. I really like these names. And yeah, oh wow, okay, interesting. Um, but yeah, you guys, she's got some trades for you as well. And let's see how it goes. Remember the names that we talked about. Remember, a lot of the names that we discussed, they're not really focusing on the short term. We do have trades that we talked about that focus on the short term, like Google, and there was another trade that we talked about. But a lot of our trades are, I mean, swing trades that you can buy this week without having to worry about the short-term performance, that are really set up for the future. The research has been done, and the chances that we make great profits on them is really good. Um, that concludes. Let's catch up tomorrow. Let's catch up tomorrow. I will be in the live trading room every single day, 30 to 45 minutes after the bell. And the reason why 30 to 45 minutes after the bell is to really give myself enough time to let the market digest and deal with a market that is basically that's giving me the post shakeout fake out price action range. Thank you. Thank you guys so much.
Thank you
Like I
so
said,
much.
we will be
Appreciate
back.
you.
Thank you so much. Greatly appreciate that. Thank you for being here, Maddie. But yeah, team, I'm really excited for the mentorship classes. I do want to start I do want to start doing the mentorship classes, and really try and show you guys the price action strategies that we should be applying. Showing you guys the psychology of the market, telling you guys where to stay out so that you can really get the extra push to not be sucked into the illusion of the whole short-term trading. And I'm telling you, team, I promise you, if you just give it a shot, what is it called? There's going to be what is that term? Another term for trials and errors. There's going to be that, but overall, you will find that it is so much more safer, a lot less stressful, lets you be with your family, especially if you're somebody that that is just having kids, or you have small kids, like you have a 8-year old, you have a 10-year old, you drive them to school, you do all that. There's absolutely no reason to be touching zero DTEs or one DTEs. You should be doing the way that I showed you to swing trade. You should buy a contract that gives you plenty of time, but at the same time, maybe you'll sell it literally overnight. Sometimes what you'll do is like you'll buy a stock, and then the next morning the stock will gap up and then sell off right at the opening session. What you will do is like you'll see your profit at the top, and then when it goes down at the very bottom of the day, let's say you'll buy the dip and it goes up even more after that. Oh my god, you guys, I'm telling you, there are so many great benefits to trading's to trading the long-term swing trades this way, even if you are doing it within the short term, within the short term realm, really. So give yourself time, give yourself that flexibility, and you should see great progress from your trades.